Hey folks, and welcome to the Pipnotic Symposium on the 23rd of July 2024. I just want to talk a little bit about a trade that I'm currently in, and just kind of like talk a little bit about the rationale behind this trade and how we can use the software on the tiny time frames. This is the 1 minute chart, which is actually the chart that I took this trade on, and this is a stock. Okay, so this is Microsoft, and this is something I was watching, and the reason I was interested in that is because on the hourly chart, earlier today I took a very small short off here. As you'll see, we had a lovely trade just here where prices poked into this little area here, and then we had some rejection. What I liked about this is I liked the way prices gapped higher and then tested kind of the base of this sharp move higher. Then we managed to rally, accumulate, and then rally. And so my whole thought process was that this little rally would continue a little bit higher, and I'm guessing it'll probably begin to peter out once it moves back into this rectangle here. I've got my target here, but I'll leave that up to a little bit of discretion later on. But what I was thinking is that I want to try and refine my entry, and so I went down to the 1 minute chart and I just look for just these super clear price structures where you have prices moving like this, moving away from an area. Let's just go here, and then up, and then down, and then up, and then we spoke about this many times before, moving back down to a zone like this. And so I was expecting prices to slowly begin to move lower and lower towards the zone that we can see just here. Okay, so I put in an order, a buy limit order, just here initially, and then as price started to move, I moved it down. So I moved it down here, and then I waited for price to kind of, actually no, I didn't. I closed the order, and then I got it at market, and I got it at market just around here once price fed into this kind of price point just here, and the spreads put my entry in just here, and now prices are beginning to wriggle higher. Okay, and so I mean the whole concept behind this is that we have a price structure. As a matter of fact, I was just on a webinar with Chris Lauren. He was talking about this, where you have an inefficient price run like so, and prices typically like to rebalance those. And so we have some liquidity here. Okay, prices move away, and they start to kind of move between some kind of a liquidity top and some kind of a liquidity bottom, which we have down here. Okay, and we want to position ourselves at the base of the move. Okay, and this is the move. This is a price inefficiency. You see how the candles start to get taller as they get deeper, rather closer towards the top of the book. Well, then we have an expectation that price is going to return to the base. And so this is just a small trade. As a matter of fact, I might just clip this out in just a second. But prices were getting close to this. Okay, they were getting close to the base of this price inefficiency. Okay, price stabilized, and when price begins to stabilize, then, which is what we want prices to do, we don't want to be getting in when prices are illiquid like this, because we'll typically get a poor spread, a requote, slippage and whatnot. And so you want to wait, and the best way to do that is to either get in at market once price has begun to stabilize a little bit like we did down here, or put your limit order in and hope that just put your limit order on the right side of the spread so you do get a fill. Okay, and so this is what we did down here. Okay, so prices is currently moving. We're just a few points up. It's not like a big one, and maybe 18-20 pips up now, and now we're just kind of going to wait and see what happens. So I'll pause this and we'll come back to this shortly. Okay, so coming back to this, on the 5 minute time frame, we have a really nice clear situation here. We've got this attempts to move into an area, and we failed. We finally breached it, and so now we are just simply we're simply just trading that test. Okay, and the reason this is often a beneficial setup is because once we have a zone that has been tested, but we experience failure either from a below and above, like so. Once price does manage to move above, this is typically the market agreeing on the willingness to accept higher prices. Okay, so prices broke up, we broke above, then they started to stabilize a little bit, rebalances price inefficiency. We typically return to the base, which we talked about just a second ago, and then prices will typically wriggle higher to the opposing side of the market, wherever that may be. So if I turn off the screen drawer, we go to the slightly bigger time frames, we can see where prices will likely go. Well, first of all, we're going to have to struggle with this price structure just here. This is where we had the short earlier today. Prices came down to this zone here. This is beautiful because we had a test. We broke it, we tested it, and now we're leaving. So this is just a really nice setup. I really like these. And what you want to do is you want to focus on those. And you get out of trades pretty much the same way as you get into trades, where we had a zone here that was tested, many tests, and then finally prices were able to move through it. And so this is going to be a price sensitive spot in the future. So this is what I'm expecting. I'm expecting prices to move through this little zone just here and move somewhere along around this green line. Okay, so this is what we're going to try and wait for. Okay, so on the 4-hour chart, notice that we are stuck right here at this little 4-hour chart right here. Okay, we've had a pretty good run considering my entry, and so we might want to consider either taking risk off, taking at least funding the stop, which I've already done, and leaving the rest of the trade open in anticipation that prices move higher, or we wait for price. Yes, so we either close the position, half the position to fund the stop, which is done, or we take the whole position off. That's scenario number 2, because we actually had a pretty decent run and we've moved. The risk reward is beneficial for us, or we leave it on in anticipation of a continued push higher. If we have a look here on the hourly chart, I'm thinking that we are likely going to have some trouble moving through this just here. And the reason I'm saying that is because on the 4-hour chart, we are actually moving up into this pretty liquid spot. And as I mentioned on the my previous points, we had a low here, low, high, we came down, we kind of sat on it, the market opened, we gapped lower, and now we're kind of returning to that. So this is that spots that we could see very clearly on the 1 hour. So prices are kind of sitting around here currently. Okay, and so what we want is we want actually the market to move. Let's just draw this line. This zone here corresponds to this. What we want to see is we want prices to move efficiently up to this zone for us to argue for a continuation through the zone. What we don't want to see is you don't want to see prices inefficiently move up into a liquidity base like this, because typically the liquidity available here is going to be greater than the liquidity available in this little tiny skinny leg, as you can see just here. And so you want to see efficient price movement up into a zone. And this is what this is to us. This is simply, if I'm drawing the zone once more, is that we have our pancakes on the plate. This plate is upside down. I've talked about this, I don't know, 1,000 times probably. But we have our pancakes here, and then we have price move up to it. Prices typically will go up, nibble away at the first pancake, second, and it'll have an easier time moving through all the pancakes slash order blocks in a zone like we have here. if price moves efficiently into it, in contrast to an illiquid price movement or inefficient price movement. So if I just kind of redraw that, we do it differently, where we have prices moving up into the zone. I mean, let's say I mentioned this on a course slide a while back, where we have, let's say we have, I don't know, let's say we have 10,000 units of this asset at each level here. So we have 10, 20, 30, 40, 50,000 in this whole block. This is just a theoretical number. Prices move up. I mean, there's very likely not going to be 50,000 or more at the top end of this book on the bid side. Okay, when you see inefficient price movement like this is typically the absence of liquidity. Okay, so the bids are likely going to dry up. They're likely going to feed into this pool of liquidity here, and they'll likely get overwhelmed by the selling pressure, and prices will typically collapse and move back to the origin of the move into that zone. Okay, and so what we want to do, we want to have a look here. We want to have a look at the move up into that area. And notice here how we do actually have like a pretty decent moves. We have out of balance, rebalance, imbalance, rebalance, imbalance, rebalance. Okay, and now we're starting to move away from that. But notice that this is the picture of this constant rebalancing in contrast to this. Okay, so this is the desired scenario if you want price to remove pools of liquidity, supply in this case on the opposing side of the market. So this is what we're waiting for, and this appears to be what is likely going to happen. So I'm going to keep an eye on this. I'm just going to close this video down and manage this trade, and you guys can follow on afterwards. And this is Microsoft. Thanks for watching.